The Enforcement Directorate has arrested Viresh Joshi, a former chief dealer of Axis Mutual Fund, accusing him of running a massive front-running operation. While the story may appear to be a straightforward case of alleged financial fraud and Joshi's subsequent arrest, it has many characters and plot twists. And what is front-running? We take a look. The ED conducted search operations at multiple locations in Delhi, Mumbai, Gurgaon, Ludhiana, Ahmedabad, Bhavnagar, Bhuj, and Kolkata under the Prevention of Money Laundering Act on August 1 and 2. These searches were linked to trade activities in scrips traded by Axis Mutual Fund between 2018 and 2021. The action came after a Mumbai police FIR last year said that Joshi exploited confidential or non-public information about trades to be executed on behalf of Axis Mutual Fund to preemptively buy and sell stocks to illegally make money. And how did he do all of this? He used a trade terminal in Dubai to punch front-running trade orders through mule trading accounts obtained from various brokers. How do these terminals work? How did he create a network of mule accounts and just how much money is involved? We'll take up all these questions in today's video. But before we begin, I'd like to remind you that we have started a new video series on issues of corporate governance and businesses and their effect across sectors. I appreciate the feedback our discerning viewers have sent my way, and I urge you to keep it coming. In its statement released after Joshi's arrest, the ED said that the accused cheated the investors of Axis Mutual Fund, which holds assets under management of more than 2 lakh crore rupees. Following his arrest, Joshi was produced in court and has been remanded to ED's custody till August 8. There was also a rumor that he may have come under the authorities' radar after purchasing a Lamborghini supercar, but his lawyer has denied any such development. So, we keep talking about front-running in financial markets. But what does it really mean? Let me explain. Institutional brokers often have big clients with substantial wealth. When these clients with big capital want to trade shares or any financial instrument in the market, they rely on these traders or brokers. For example, through Viresh Joshi at Axis Mutual Fund. By the way, Axis Mutual Fund has said that the recent investigation bears no connection to its current operations and that no search or seizure involves any of its offices. Front-running is when a broker or a trader uses advanced knowledge of a client's big order to make personal profit. Let's say a big client wants to buy a large position in company X. When this order is placed in the financial market, the price of the share starts moving up as others see that there's huge interest in the stock. Now, naturally, the broker has advanced and confidential knowledge that their client is about to buy big. Before placing the client's order, the broker goes ahead and personally buys some shares. Once the client's big order goes through and the stock prices rise, the broker sells their shares at a higher price, making a quick profit. This is illegal and unethical because the broker has used confidential or non-public information unfairly, putting their interests ahead of the client's. While this practice sounds a lot like insider trading, there's a slight difference here. Insider trading usually involves company executives or employees unfairly using confidential company information to gain an advantage in the stock market. Front-running, on the other hand, involves brokers or fund managers exploiting knowledge of their clients' upcoming trades. While front-running abuses client trust, insider trading abuses privileged access to information. Now, let's come to the specifics of what happened in the case of Viresh Joshi. The incidents and allegations we are going to discuss are based on 3 key documents: SEBI's 96-page interim order from 2023, an FIR filed by the Mumbai police in December 2024, and the ED's statement after Joshi's arrest. The investigation period of the SEBI report is from September 1, 2021 to March 31, 2022. The chief dealer at Axis Mutual Fund had access to confidential information about upcoming large trades by a major client. And because of this, the SEBI order classifies him as an information carrier. The report says that he had help from others as well. It divides these people into arrangers and enablers. Let's look at the cast of characters. First, the arrangers. The following people allegedly helped Joshi by finding others willing to let their trading accounts be used. Sumit Desai. Joshi asked him in September 2021 to arrange trading accounts. Pranav Vora. A long-time acquaintance of Sumit Desai, he was approached in October 2021 for the same purpose. Second, the enablers. These individuals and firms allegedly provided accounts and trading platforms that allowed the suspicious trades to happen. And they are Prijesh Kurani, who was based out of Dubai, is a key name in the case. In fact, Kurani frequently referred to Joshi as jadugar in his texts. Kurani acted on Joshi's instructions and placed the orders using trading terminals of Marfatia Stock Broking Private Limited and Woodstock Broking Private Limited. His family members lent their accounts to Kurani for the trading activity. Trading terminals are software platforms that allow investors or traders to place, modify, and monitor orders directly on stock exchanges. Marfatia Stock Broking Private Limited and Nishal Marfatia provided access to their trading terminal and accounts, which were then passed on to Kurani via Pranav Vora. Suresh K. Jaju, Visa Capital Partners and Woodstock Broking Private Limited also allowed access to their accounts and terminals. Bhavin Shah, Rupal Shah and Olga Trading Private Limited were also allegedly arranged by Pranav Vora and were used for the trades. And finally, Vaibhav Pandya, an employee of Sumit Desai, was responsible for sharing login credentials for trading terminals. Do keep in mind that these are all allegations at this point and the ED is investigating these charges. SEBI says that it examined Axis Mutual Fund's internal trading process to trace how confidential trade order information may have been leaked. Axis Mutual Fund clarified via emails dated September 22 and November 17, 2022 that fund managers decide which stocks to trade along with the quantity, price limits, and scheme details. These instructions are entered into the Bloomberg Order Management System. Once entered, the dealing team, led by the dealer, in this case it was Viresh Joshi, is responsible for executing the trade. SEBI observed that in such a setup, the dealer controls when and how orders are placed. Now, SEBI says that it found that Joshi leaked this information. Its report says that Joshi worked in a private environment, he had the Bloomberg system installed on his laptop and operated from home or a separate dealing room due to COVID protocols. Basically, he was not under direct supervision. What's important to note is that he had multiple mobile numbers but disclosed only one to Axis Mutual Fund. Tower location data confirmed that these phones were active inside the Axis Mutual Fund office, indicating the existence of an undeclared communication channel. SEBI highlighted a case from December 2, 2021 involving the stock of Gland Pharma Limited, where Joshi was simultaneously negotiating trades for both Axis Mutual Fund and Bhavin Shah, whose account was used in front running. Bloomberg Systems chat records also show that Motilal Oswal Securities Limited believed that they were negotiating with Joshi for Axis Mutual Fund, but in fact, Joshi was arranging a trade for Bhavin Shah. SEBI says that it has also reviewed how Joshi passed on information to the others. It says that he shared this information using platforms like Apple FaceTime and Bottom, which is a calling app. It also refers to supporting evidence from whistleblower complaints, call records, and WhatsApp chats. Taken together, this strongly suggests that Joshi regularly leaked non-public trade information to Kurani for the purpose of front-running. The ED says that while the proceeds of crime identified till date is more than 200 crore rupees, the figure could be much, much higher. This money, it says, was funneled through multiple shell entities and bank accounts beneficially owned by the accused and their family members, and this is under investigation. During the search operation, the ED froze shares, mutual funds, and bank balance worth 17.4 crore rupees. In the conclusion of its report, the SEBI says that over the years, mutual funds have grown as a popular gateway for retail investment in the securities market. Most retail investors in the country take baby steps to invest their money through SIP routes. They're assured of the fact that their money will be handled by professional experts transparently and honestly, and that the job profile of the top officials of any mutual fund demands high standards of diligence, honesty, and ethics.